But the bottom line is gold's $4,000 an ounce. In fact, it closed the week almost right at $4,000 an ounce again. Yes, we've traded below. We haven't traded below 3,900. The lowest I've seen gold was in the lower 3,900s, 3,920, 3,930, and it's gotten above 4,000. I think it got to 4,020, 4,030 this week. It's been hanging out at that area. This is very similar to the way gold behaved when it first broke through 3,000. Yes, it wasn't a line in the sand where gold didn't go below 3,000, but it didn't go much below 3,000, and eventually it took off and then went above 4,000. I think we're doing the same thing now. I think we're forming a base right around 4,000, and before you know it, we'll be at 5,000.
The headlines keep insisting the U.S. economy is booming, but the numbers don't back that up. Peter Schiff from schiffgold.com points out that the University of Michigan's Consumer Sentiment Index, a key measure of how people actually feel about their finances, just plunged to 50.3. That's a 6% drop in a single month and nearly 30% below last year's level. If consumers are this pessimistic, it's hard to argue the economy is as strong as Washington claims. Schiff says gold's recent pullback tells a similar story about perception versus reality. After nearly touching $4,400 an ounce, prices corrected sharply, sparking the usual round of panic. But to him, that's exactly what a healthy bull market looks like. Every major gold rally comes with sharp drops that shake out weak hands before the next surge. What matters is the floor, and right now, gold's holding steady around $4,000. Even when it dips into the $3,900s, buyers quickly step in. That's the same base-building behavior we saw when gold first broke above $3,000, just before it took off again. He believes the pattern points toward another breakout, possibly toward $5,000. Silver's chart looks even tighter. It's been hovering near $48, refusing to retreat toward $40 despite pressure from speculators. Schiff says that kind of resilience signals consolidation, not exhaustion. When silver traded at $30, that became the new $20. Now, with $50 acting as the new $30, he sees this as the window for long-term investors to load up before the next big run in precious metals begins. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Gold had almost hit 4,400, and they're talking about that big drop, and maybe it's going lower, which of course is what happens in a bull market. You get these violent sell-offs to scare people out. But the bottom line is gold's $4,000 an ounce. In fact, it closed the week almost right at $4,000 an ounce again. Yes, we've traded below. We haven't traded below 3,900. The lowest I've seen gold was in the lower 3,900s, 3,920, 3,930, and it's gotten above 4,000. I think it got to 4,020, 4,030 this week. It's been hanging out at that area. This is very similar to the way gold behaved when it first broke through 3,000. Yes, it wasn't a line in the sand where gold didn't go below 3,000, but it didn't go much below 3,000, and eventually it took off and then went above 4,000. I think we're doing the same thing now. I think we're forming a base right around 4,000, and before you know it, we'll be at 5,000. But meanwhile, a lot of investors aren't going to own gold for that ride because they're getting shaken out now because they're getting so nervous. I think gold is forming a nice base here at 4,000. Silver, it's not, at 50, but it ain't much below it. It's around $48 and change. I mean, it's holding pretty steady, very close to $50. It's not tanking back down to 40. So I think, again, this is another opportunity, just like when silver was around 30, and I was saying 30 is the new 20. 50 is really the new 30. I mean, yeah, you could buy it a little bit below, but for who knows how long. So buy yourself some physical gold and silver at Schiff Gold. The gold mining stocks, again, a lot of these stocks are now in bear markets. It is amazing how far off their highs most of these gold and silver mining stocks are, even though gold is almost 4,000, even though silver is almost 50. These stocks have lost almost all or all of their gains, since gold was, I think, 3,600, 3,700, since silver was 40. A lot of these stocks are back down to where they were when silver was 40, even though it's 50. And they're just so scared because, well, it was 54, so it's going down. So what? It was 54 for like a day. I mean, if you took that 1 week out, we'd be at the highs, right? I mean, where we are right now is, a month ago, this would be record highs for gold and silver a month ago. Yet there's so much bearishness among investors. And there's not nearly enough bearishness among crypto investors. They're completely complacent. They're happy as clip. They're not worried at all that Bitcoin is going down. They think it's on sale. Hey, it's $100,000. It's on sale. On sale, you're buying nothing and you're paying $100,000. The sale is on gold and silver. And where the sale is whatever you would buy if you just sold your Bitcoin up here. But people don't want to sell it so much that they're going to borrow against it, where they're going to sell it. It's just going to be sold out from under them at a much lower price than if they just sold it right now. So get your gold and silver, buy these mining stocks. If you look at what's been going on in the economy, right, the negatives are really coming to the surface, despite the fact, and again, Donald Trump on this 60 Minutes interview talked about how the U.S. economy is the strongest it's ever been, and it was the weakest it's ever been a year ago when Biden was president, and it went from the worst economy to the best economy, and it's the hottest economy in the world. And everybody agrees that it's the hottest economy in the world. They said the U.S. economy was dead last year, and now it's alive and thriving because Trump is president. Well, if you look at the actual economic data, it belies all of that bragging that's being done by Trump. We got the University of Michigan consumer sentiment numbers that just came out, and not only were they much lower than expected at 50.3, a 6.2% decline from the prior month. And it's about 30% lower than it was a year ago when, I guess when Trump first got elected.
Peter Schiff says the gap between political rhetoric and economic reality is widening fast. Consumer confidence has fallen to its second lowest level since 1978, even as Trump continues to call this the greatest economy ever. The problem, Schiff argues, is that people living through it don't feel any of that strength. Their outlook today is almost as grim as it was in mid-2022, when inflation hit a 40-year high near 9%. Prices might not be climbing as fast now, but they also haven't dropped, and that steady strain on household budgets is what's fueling frustration. Schiff points out that Trump's claim that inflation has fallen below 2% simply isn't true. The data still shows stubbornly high costs across essentials like food, rent, and insurance. Add to that a job market that's starting to crack, and it's easy to see why optimism is fading. The latest report from Challenger, Gray, and Christmas showed more than 153,000 layoffs announced in October, an increase of 183% from the previous month and 175% higher than a year ago. Most of those job cuts came from big tech firms, meaning even high earners are feeling the pain. Schiff warns that it's now the worst fourth-quarter layoff trend since 2008. Let's get back to the interview.
This is the second lowest level for consumer confidence going back to 1978. Second lowest. So according to Trump, we've got the greatest economy ever. Yet the people living in that great economy are almost as pessimistic as they've ever been about the economy. And the only time that consumers were this worried about the economy between now and 1978 was in June of 2022. And that was inflation when it had peaked, around 9%. It was at a 40-year high. And that's the last time consumers were as worried. Yet on that 60 Minutes interview, Donald Trump claimed that inflation is gone. He's killed inflation. There's no more inflation. He thinks it's lower than 2%, even though it's higher. So he's already claiming victory on destroying inflation. When one of the reasons that people are so pessimistic is prices are rising. That's one of the main reasons. And their outlook for prices is that they're going to continue to rise. And another reason that consumers are so pessimistic is because the job market is not looking good. In fact, earlier this week, we got, in fact, it was just yesterday or Wednesday, we got the job cut number from Challenger. You know, we would have got the official jobs numbers today, but we didn't get those because of the government shutdown. But we got these Challenger job cut numbers, and these are announced layoffs. And for the month, it was 153,074. That's a 183% increase from September and 175% higher than a year ago, October. These were the most job layoffs that we've had in an October since 2003. And it was led by layoffs in technology-related companies. And that was probably similar back then because we had, you know, the bursting of the dot-com bubble. We had that recession. But it's technology jobs. So these are probably high-paying jobs that are getting axed. And so the worst since 2003, but it's the worst or the highest number of announced layoffs in any month in the fourth quarter, right, which would be October, November, or December. The highest since 2008, which was, of course, the financial crisis. So, I mean, this is telling you if we haven't had companies laying people off at this rate since we were in the middle of the financial crisis, not even the middle, like the depths, the fourth quarter of 2008. I mean, that was it. It started in the summer. So companies were in a lot of trouble. The economy was in bad shape. We were deep in the Great Recession, right? The worst recession since the Depression. And now we have the same amount of layoffs as we did then. Companies are that worried. They're cutting back and they're downsizing. And Trump is out there, you know, going around the world, you know, telling everybody how great our economy is. This is the reality, right? Economic reality flies in the face of this fantasy that, I don't know, maybe Trump believes it, maybe he doesn't. I have no idea. But this is what he's saying. But it's got to be very frustrating to the people to hear all this nonsense and then compare it to their own experience. And one of the places that they're taking out their frustrations, obviously, is the polls. We had some elections this week. I'm going to talk about that. But this is a harbinger of what's going to happen in the midterm elections coming up, in another year.
Beneath the upbeat headlines and political slogans, a far more fragile picture of the U.S. economy is coming into focus. The disconnect between official narratives and everyday experience has rarely been this wide. People aren't just uneasy, they're exhausted by high costs that never seem to retreat, by job losses creeping through once secure industries, and by leaders who keep insisting everything is fine. Markets reflect that unease in subtle but powerful ways. Gold's steady base near record levels isn't just about investor optimism. It's a quiet referendum on trust in the system itself. When confidence fades, capital seeks refuge, and right now that refuge is in tangible assets that don't depend on government promises. The same goes for silver, which continues to resist deeper pullbacks even under heavy selling pressure. These aren't the signs of markets running out of steam, they're the early rhythms of a larger revaluation. If policymakers keep ignoring what the data and the people are signaling, the next leg higher in precious metals could arrive faster than anyone expects. When that tipping point comes, will investors finally see gold and silver not as speculative trades, but as the clearest reflection of a system losing its grip on credibility? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.